All right, hey everybody, Day Trader Rockstar here, and a video where I'm going to call this video kind of the roadmap of a trading day. Looking at the overall areas in the market where you want to be involved, and the higher probability zones you want to really trade, and it's very important to wait for those zones. So for me, I decided to set a rules to keep me out of trading, keep me away from keep me out of bad trades. Only get me into when we have a confluence of indicators, when we have certain things that are lining up that I know through years and years and years of trading that these things work out on a certain, when you have a certain combination of things happen, especially when it comes to trend lines, patterns, momentum shifting, the stochastics and stuff. So all these things, we made a set of rules, and we only take the trade if the rule is set up. So I want to show you those rules today as a good example. Now you can put this template on any day. The rules are going to be the same, but this is a good day to kind of go over the rules. And this is what I call my intraday. We'll call them the intraday rules or roadmap. I always use the word roadmap to the market. And kind of do a play-by-play and show you the setup. So we're going to start off on it. This is just a typical Thursday, and the market's been just to kind of give you some backdrop on the market. The markets have been on some shaky ground recently going into September. We just started September, and we are starting to see that rotation down. That rotation on the daily stochastics, and the stochastics are my foundation indicator. It's a lot of things that are based on stochastics, but we also understand trend identification. Trend, how to identify a strong trend, a weaker trend, a pullback, and understanding pullbacks are part of the market. And there's good times to be in the market, and there's bad times to be in the market. There's good times to be long, and there's bad times to be long. And going long in a pullback type of market is not the smartest thing. So we develop these rules to keep us out. So this is kind of just where we are. We are in this area where market's coming in September. I've gone over every day. Let me just throw out that I do a show each and every day, live trading show at daytradingradio.com. where we trade live from 9 o'clock in the morning till 4 o'clock in the afternoon, and then evening classes. Evening, we're always trading. I'm trading right now, so that's our life. I've been doing this since doing the show and doing the live trading here on Day Trading Radio since 2007. I've been trading live full time since 1996, 97. So that's the history here, and over that amount of time, we've perfected, and I want to say perfected, a method of trading that gets us into the right trades, keeps us away from the bad trades or over trading, which is so important in the market. Because the market is very hard, and sometimes we just don't look at it. We do the opposite. It's human nature. We're emotional animals, and sometimes emotion takes over, fear and greed take over. And that's a recipe for disaster in the markets, because the markets will give you opportunities, but unless you take it off and take that opportunity, whatever the market's going to give you, it's going to give you. It might not give you what you want, but you have to recognize that, and you have to take what it gives you off. And then at the times the market's going to give you a lot more, and the other important thing is being there when the market's going to give you that opportunity. So all these little things you have to be perfectly aligned. You have to be in front of the market when the market's giving you an opportunity. You have to be understanding of what the market is, what kind of profits you're getting. And this, the timing, the patience, and the discipline has to be, at a level which is a professional level, like you're a professional sports player. You have to have that type of discipline. It's really hard, and that's why most traders fail to get to that point, because we all fall back into our habits, and we're all human beings, and it's not as easy as you think, and everything else. It is a very tough business to be in as a trader, as a short-term trader. Long-term trading, I don't think it's too hard. The market's going up, getting some good stocks on a pullback, and you should do okay over time. Short-term trading, daily income trading, much, much harder. But here we go. I'm going to show you the rules of the trade and when you should be getting in. This is just going to be a blueprint of the markets. And when I say blueprint of the markets, I mean apply the same setups, the same rules to any market day, and you should be okay. All right, so markets open. Like I said, we're here about 9 o'clock. We're watching the markets open up. The 9:30 time frame right here, the open is always, very volatile and choppy. Other times we kind of watch that 9:30 to 10 o'clock time frame, and at about 9:50, there's lots of times an area at 9:50 we call the 9:50 reversal, and we watch that level. Now, we like divergences to happen between 9:30 and 10:30. I like that area for bigger reversals in the market. Now, the market's been kind of weak over the last few days, so we're kind of looking at that in the last couple of days. On this market, I knew that we were seeing more selling, so we are focused on how to determine.
Submitted. Order filled. Order submitted.
That is the rock bot
Order
going
submitted.
off.
Order submitted.
Or is that? No. Yeah, that's the rock bot there in the background. Let me get distracted here. All right, so I wanted to kind of write this out into some notes, to kind of put us into a little bit more of a little bit more organization on rules of the trade. So during the day, to kind of push it back a little, we're looking for certain areas to trade, and the things we're looking to trade are these three kind of patterns. Quad rotations. Quad rotations are when we have multiple time frames getting oversold. You'll see examples of those in a second. Buy and sell divergences. Of course, those are our go-to foundation type of setups where we have a change in momentum that we see internally on stochastics, the way the stochastics are set up. I'll explain that a little bit more. Coils. Coils are a great timing tool. I love coils in combination with everything. Quad coil, coiled with a divergence hold. Coils are really important. And these are the different setups that we're looking for, that we're going to see with stochastics. Typically, we're going to see these with the stochastic. We're going to see the quad rotations with stochastics, the buy-sell divergences and coils. All this we're going to see with stochastics. Over here, I want to call it my confluence trade trigger. And what I mean by that, we need something else to kind of line up with these. And when we have that line up, that's our trade trigger. So if we have a quad rotation on a VWAP, or a quad rotation in right on the channel, or a sell divergence right on the channel, or wedge lines, if we have so these are the three things we're looking for. We have channel lines, which I'll explain that in a second. It has to be a 1-2-3 channel. 1-2-3 channel. And it's very important to determine if there is a trending market, because that's going to determine your exit strategy. And these are this is just an outline of the basic rules we're going to be using. So I want to keep it really simple, because overtrading is the death of all traders. That's what's going to get you eventually, overtrading, because overtrading is going to give you more losses. I want to come back to this. I'm going to save this too, and I'll put this out. You guys will get a copy of this if you need it. So now we're going back to the market. So the market goes up, and again, some of the rules we're looking for to determine if there's a channel. I'm always looking for channels, wedges. We're looking to see if there's a trending market. And then we have our 4 stochastic bands here. These are super important. 4 stochastic bands. That's what it's almost like watching an echocardiogram. This is the pulse of the market, and we could read different things about this. We could look at the big picture, which is defined by the 60-10, and then we have the smaller patterns inside the bigger pattern, which is defined by the 9-3 and the 14-3. And the 44 is just something I use for other things, but it also adds a nice little medium, kind of a halfway point between the 9-3 and 14-3 and the 60-10. So it works out really good. So market opens up. No rush to get into anything, because we're defined. We know what we want to do. We want to on our divergence setups. As I go over all the time, what divergences mean when it comes to stochastics and George Lane's work. George Lane is the father of stochastics, the inventor of stochastic divergence trading. Where we watch the market go up in a fast, kind of a fast way of explaining it. You have you're measuring the strength of the close of each candle compared to the recent candles. That's what the formula is. And you have 2 lines on stochastics. You have the K line and the D line, percentage K and percentage D. And these percentage K and percentage D come from a lineage, if you might have heard the percentage R. You probably heard some other percentage indicators out there. They all came from the same group of traders back in the 1950s. Anyway, So, we're looking for that. We understand how stochastics and measure momentum internally, but we can't really see it on the candlesticks. We can see the stock kind of continue to move up, but we might actually see the stochastics start to turn lower, and we know that that's going to give us a move down. Now, if we have an upward trending market and the stochastics are typically above 50, here comes some of our rules. Now, if we do get a divergence, a sell side divergence, where you have a high and then a higher high. Now, this is very micro. This is what we call micro scalping. This is, and we don't even know how good of a setup that is. And we don't care. We're not saying that's that's the top of the day and we're going to come all the way down. It didn't pull back all the way. It didn't pull back a lot. But when you see that signal, you're going to get something. And determining how you're going to get it is determining the 60-minute stochastics. If it's holding in the upper part of the band here, we have it goes from 0 to 100. And 80 and 20 is considered our overbought and oversold level. Oversold is the the 20. Overbought is the 8 above 80. And we like to see that 60-10 to be embedded up here. Embedded means it's stuck up here. It's just not going up and down like a 9-3 goes. It gets stuck up there. So if it's hanging up there and we get a divergence and you get a fast rotation on the 9-3 and it brings you down to the 80, without a doubt, you take that profit off, and especially if it's holding the moving averages and it's on a trend line. And there was a nice trend line here. All these things here, we had this trend line. I always put in a trend line. If I see 2 points, I'm putting in the trend line. So I see these 2 points, and typically what I'll do is I'll put another channel line in here at the top of the pivot there. Typically, this was kind of right at 8:30 was news. So we got to be careful with news, because sometimes you get an extension on news and it just and then it pulls back. So you have to be very careful when you have news and you get extensions, because you have to put your trend line really not at the extension of the candles, because that's just very little volume up there, but you want to find out where the mean of the averages of the closes after that, and lots of times we'll come back and retest it. That's what we start to that's when we start to look at our channels. We start to put those in. But the bottom channel line is very easy to see. You had 2 good pivots. A pivot is when the market goes from one direction to another direction. That's a pivot. Grab the pivot and extend it all the way up. So again, you have up here possible divergence, trend line, 1, 2, 3 channel line, sell signal, and a pullback. And it comes right down to the channel line here. And you got oversold. And that means you have to take it off. You might not get a lot out of this. Even though this is quite a bit, in the market conditions we're seeing these days, this is great for us. This is 10 points. Sometimes you can just get 1 or 2, and it's really, really a hard trade to, kind of wrap your hands around it and get anything. But these are giving you some moves. And this is not the best trade setup, but everything has a rules. All trades have rules to be applied, and that's going to keep us out of all right, we're short here, and it got oversold, and we're still showing that strength, even though we did break underneath the 80 here. If this gets down to 20, and this holds above the 20 and 50, and it's on a trend line, 9 times out of 10, that's going to hold, because of the 20. The 9-3-20 is more powerful. That rotation gives you that fast little move back up. Plus, we're right in the morning. It's a lot of volatility. It's a very dangerous trade either way, and it continued to move back up. So if you did take that and you get a little pullback, that's great. Market got back up here. We're looking for maybe a divergence here. Couldn't really see one. There might have been a little lip divergence. Lip is kind of like a high and a higher high, very barely, a little dip down there. It's very hard to see that, But one thing you do have here is what we call the quad rotation sell signal. So you have that area up here. And when you get that area sell signal, it's just like a buy signal. And if the market's been selling off the last few days and there's no bullish indications, there's no reason for the market to rally, most likely your quad rotation is going to be a sell signal. So that was actually a great little high there. And that was it. That was all she wrote. Market started trending down. And when the market trends down, you watch that 60-10 move down. And once it gets embedded down here, you have to be careful, because I know a lot of people are buy-side traders and they want to get that bounce. So you look at the quad rotation. If you get a bounce, and this is where it comes down to understand that the market, if you're going to take longs in the downtrend, it's not going to give you a lot. So unless you are in the right mood, the right frame of mind to say, I'll take whatever it gives me, just give it to me, and I'll be out. I'm not going to complain or anything. It gets up to that 80, I have my finger on the trigger. Most likely, if we're in a bigger trend, we're trading under the 20-period moving average, we're trading under the VWAP, we're inside of a downward channel line. Most likely, that channel, this is going to be like a flag. You have the flag pull down, the move back, the rotation up, and this is down. So that's our flag setup. If this is embedded down here, or it's just sticking down here, and we just don't see any strength on this, and we know there's downside, every rotation needs to be sold into. Every rotation. It's best to be safe instead of trying to outguess the market. So this was a nice bear flag. It dropped right off of there. We came down here. We had this pivot now, and this pivot was established, and we had this, so we could see there was like a little wedge pattern starting to form. Market came back to this level. We actually had a support line here. And we kind of call this another quad rotation right here. So this is, the little areas that you don't want to hear. This is a tradable trade right here. Bear flag. Quad rotation sell signal. If you would have caught that, it was up against the trend line. That was actually a good thing. But down here, you're looking for a long. And you're saying, all right, how do I know to go long? Maybe because we've been quadded up and we're right on this area, and we should get a little bounce. And we did get a little bounce. But look what happened. It didn't go too far. But what happened is that 9.3 got right up to that 80 level again. This didn't even move. You got 1, 2, 3. You probably got 2 minutes of upside. And that might have been like 3 or 4 points, which is a lot in this environment at this point. And that was all you're going to get, and then it kind of just drifted sideways. And it was kind of a dead market here. And this is, again, you don't want to get involved here. You only want to get involved when you have the playbook pointing out your trades. So remember, we're looking for three type of trades. We're looking for a coil, we're looking for a divergence, and we're looking for quad rotations with divergences. Here and flags, maybe flags here, that rotation here. So you have the quad rotation, you get in, it gets overbought, you get out. If you're jonesing to go long and you get a quad rotation, here's a quad rotation here. All right, and you decide to go in there because it's a retracement to a trend line, and you take a shot there and you get that nice move up here, it gets up here, and you're up above the 80, you probably should take that off there. That's a nice little move because you can see it died out after that point. Then it eventually started going back down. Actually, that rotated back down and then popped. It got overbought again, and then you could see it pulled right back down. We got oversold again. Now we started to develop a little channel. 1, 2, 3, 4, 5, 6, and we kind of got that quad rotation on the support line and on the lower channel line. So again, here's our confluence trade. Our confluence trade is, let me get my, where's all my information I just wrote up. Give me a second here. I'll dig it out. Here it is. So here's our confluence trade. Do we have a bi-divergent? Do we have a divergence or quad rotation? Do we have a quad rotation combined with any channel or wedge line or VWAP or support and resistance line? So do we have any of those combinations? And that's what we're looking for. So we did have a quad rotation. There's a quad right there, nice quad, and we had a channel line, a really understandable, and we had a support resistance line right here at 5,500, big number. That was a really, really good area to go long. And as you can see, a big pop, and this was at 130. And once it started to lift back up and you had the momentum on the 60-10, you'd rather be long, unless this starts to fail and goes back down. But once you have that 60-10 on your side, you're probably looking at more upside than downside. And you can see we kind of started moving back up, and we kind of got up overbought here. So right when we got overbought, all we're looking for is the rotation back down. And then when you get that rotation back down underneath 80, and this is holding the 80 line, that's what we call a bull flag. And this is kind of the flag right there. That's what it really, if we're looking at it like this, we're looking at this pullback. We had a kind of a tie there, pivot there, and then we kind of came right down to the low pivot there, and that was a quad rotation here, and we're right on the channel line. But this is a flag setup because of the 60-10. It's not a quad. It's the 60-10 is holding good strength here, and we got that fast rotation on the lower trend line. So it is, buying into that weakness is always the best thing. Is seeing that, recognizing that, and that's not too many things you have to recognize. Right here, that's a good trade setup. You should start to see that channel play out, and then you start to see we're oversold, and you start to see some strength here. And if you have a lower channel line, you take that shot into it. You take it. You put your stop right underneath that channel line, and you should take that. And back here, lower. You look at the pullback. Look at the channel line. 1, 2, 3, 4. It got down to the lower trend line. Here was a quad rotation. Same thing right here. Nice quad rotation channel line. Pullback, quad rotation. Pullback, channel line, quad rotation. Or this is actually a flag. That's a quad rotation. This is a flag. Much different. Anyway, both nice move up. Then we started pulling back off of this level. We kind of got a quad rotation. And it was actually kind of a 5-minute sell signal here. You could barely see it. You could probably see it on the cash. It was about 245. And again, this is kind of, you'll get this eventually. You'll get it, and you'll start to, what you see here, look at this. This is, you had this little high, and I'm looking at this high right up here, all right? And that high right there has that high here, high here, high here. But you can see there's just a little lower high that's happening there. It didn't get up above the 80 line. It kind of started to fail even though we made new highs. And that was about 250. So let's look at 250 because it looks like to me there was kind of a sell divergence here based off the 60-10. Very good. If you see that 60-10 divergence, and it's not, again, everything takes a little time. You're not going to be perfect right off the bat. You're going to have to get used to this stuff. You have to be disciplined. You have to be patient. You have to let the best setups come. But do you see what I'm pointing at here? Do you see that it's holding underneath that 80 line there? This is above the 80 line here. The price is lower here. This is the higher. Price is higher here, but the stochastics are lower. You see that divergence. Now, I haven't looked at this on the 5-minute, but I'm so confident in my identification of 5-minute divergences and how good they work. This is a good, I might not even call this one today, but it was there. I'm looking back at it. I always review my trades every day after the close. I love reviewing it, seeing what setups I missed. All right, because we started teeing off on these later. I got this one. We're up a couple $100, $300, $400 today, just off of these divergences. Not trading a lot. So let's take a look here. This is 245, right around 250. So what I do is look at the 5-minute. I could go to this. Of course, I could just go to one of these charts here and bring up the 5-minute time frame and go back to it. But I'm just going to show you on the SPY, because even SPY traders could benefit from this. Option traders, when you have an option trade, you could take right here and look for some downside. That's a pretty nice move. It's up 55.30. It went down to 55.01. That's a 30-point move basically into the end of the day too. So that could really degrade some you could really load up on the options there one way or another. If you're playing that game. But let's take a look at it. So what time? It was 2:45, 250 today, Thursday, 250 today. So let's take a look at the SPY. And let's take a look at the 5-minute. And I might be wrong, but I already see it here because we probably did look at it. Because I do see it here. You see that high here at 2 o'clock? And that higher high right before 3 o'clock is at the 250. Look at the stochastics. Look at that. Look at how low that stochastic. If you could find that is a fantastic trade right there. That is such a good trade. Now you had a divergence here, also kind of a little divergence, but this was and this was a buy side divergence right here, 1 o'clock. But that was a sell side divergence right here. You could see it. It was so nice. And you see how you could see it? Looking here, this is why we keep the 60-10. 60-10, you're going to get an eye for it. You're going to see that little dip. You're going to see that 80 line is going to be, it's going to fail to get up there, but the price spiked a little higher. It starts to roll over. You take that shot. You put your stop right at the highs, above that candle, not at the highs, but above that candle. If you suspect that to be the divergence, it starts to confirm and starts to roll over. You take a trade. Even if you get here, you just put your stop there. You got to take the shot when the pitch is over the plate. You got to take the shot. You got to take the bat off your shoulder. You can't miss these. Now the market came down here and we sold off really hard right here. And we came down to a trend line that was easy to identify. There was 2 pivot areas, and I remember we came right down to it. And it actually, when we got some news, there might have been something here that, maybe a sell program started off at 3 o'clock. Something just, there was, lack of liquidity, and it just kind of flushed out. Now, I did have a trend line here, and it blew through the trend line, but only to close on it. And that's what happens with the markets. If you have a trend line and it breaks down through it, most likely, if it's a good pivot area, if it's good, 2 good pivot areas, and you have a real good trend line, most likely it'll come back up to it, maybe go a little bit, and then come back and test it. And then it'll hold it. So that's exactly what happened. We actually got a bounce on it, and it came back and tested it. And when we tested it, remember, when we have this is very important, when you have a candle and and it's on news or a program trade or something, they just flush it out and they kind of take some stops and stuff, and you have this candle, and it reacts right back up here. You don't put your trend line there. You keep that trend line as that trend line should be there. But that closing price, you can see that closing price here. And then you can see these candles, not counting this one candle, but you can see these candles made these lower lows right here. And this made a higher low. So this was a nice closing price, what I call closing price divergence. And we nailed that. That was a nice divergence at a little after 3:15. And it popped up here and it went right up to the VWAP. I mean, talk about the VWAP. It's one of the best things that we look at. It wasn't even a quad rotation sell signal on the VWAP, but it was a quad rotation divergence here. And that made it even a better setup. Oops, I just lost my... So when we look at that and we have that divergence, this is what we call a super signal. It's when we have a divergence and all 4 stochastics oversold. Now this divergence, not for everyone because you're not familiar with the spike down candle and how divergences work, that these candles will take you out.
Order filled.
I keep on hearing something, and I think there's something running. I don't know what's running. Something just took a trade. Oh, don't mind me. All right, so, and then we got a nice rotation up. And while we were moving here, you could see this started turning back up. Everything started turning back up. And then, of course, the market closed. Now, the market closed today, and that was kind of a roadmap of the day. So I'm kind of just circling areas that you should be trading. Just in this case, I'm just circling these to show you how many trades are viable trades and what you should be doing and how hard it is sometimes to not wait for these. But if you notice what we like about these, they all, after the fact, you look back, they all are like a decent pullbacks, like this channel pullback. When you get a channel pullback, that's when you typically get a quad or a divergence. When you get to the top, you get a divergence. When you get a pullback channel here, you usually get a quad or a channel line divergence. So here you had a nice move. Here's a channel pullback, the pullback down, the divergence here. There was a divergence here. These are that was lower trend line. All right, so that was 1, 2, 3. There was a lot of chop here. I mean, if you were just taking some overbought levels, you probably did okay, but I would just have waited on these. And there wasn't too many trades here today in the morning. Just the overbought levels. Here was the flag here. I think that was an excellent flag. I think you should have probably taken that flag because it was just a textbook flag. We did take that. And that was about it. So, I mean, let's be realistic. Flag was okay. Here was kind of choppy. This would get you in trouble. There was a quad rotation here. But, if you did take a couple quads, you probably got some bounces if you took it off.
Order filled.
But looking at
Order canceled.
looking at the real deal here, 1, 2, 3, 4, 5, 6, maybe 6 trades today. 6 that are good viable areas that you could have probably traded and made a good amount of, in each one of these areas, it was like 5,500 to 5,520. That's a 20-point move. 5,505 to 5,520, 15-point move. Let's move down. And not to say you're going to catch it all, but boy, I mean, look at the areas that you could be getting into. So this is all about just keeping, applying the rules, not over trading, not just going crazy. Wait for the quad, wait for a channel line. Go back to our line here, our importance information. Wait for the quad rotation and the confluence trigger. That quad rotation should be on a channel line, wedge line, on the VWAP, quad rotation VWAP, or on a support and resistance line. To determine if there's a trending market, the market trend will determine your exit strategy. What we mean by that, if the market has been selling off and it's just been kind of very weak, then every long that you take, you should be taking off. If you look at all these, the majority of the time you get a 9-3 rotation, it comes back. It makes sense to take your profits on the 9-3 rotation. Here you had a nice little run up before you even got overbought here. It got up to the trend line. This is a no-brainer right there. You take it off there. Even if it goes a little bit higher, who cares? Because we know these are going to continue to show up. I could go out yesterday and just tear this market and just show you every divergence. Here's a little divergence, double bottom divergence right here. Every divergence I point out to you will be a trade. It will go in the direction of the divergence. It's your job to be in front of the computer to take these trades. My job to get those trades out to you. All right, I'm not going to do it at 5:30 in the morning or 3 o'clock in the morning. Look at this, 3 o'clock in the morning, a textbook lip on a pullback. If we just had, what's the criteria? Divergence. Divergence is a criteria. Divergence trend line. Lip divergence, quad rotation, super signal, boom. I mean, I'm only circling the only, now how hard is it to go here and then not trade? You're going to be here and you're going to be taking trades and you're like, oh, I'm going to take this. This is actually a viable flag right here. That's a flag setup right here. Whenever you pull off of the 20 period moving average, you pull off the 22 moving average and you pull back and you get a fast rotation, a very fast push back down to the 20, and this holds above 80, 85. That is a textbook flag if the price holds above the 20. So these are just things that are defined, and that's all we have to wait for. That's all you have to wait for. Wait for a channel to start setting up, and then wait for a quad rotation channel line. That's your best opportunity. Quad rotation channel line. Make sure you're on a lower channel line to take those trades. And if that happens to be a divergence down there, that's even better. Take that with the ES trade. You're gonna do fine. Overtrading is gonna kill you. Taking trades that are not set up like this, like here's a nice quad rotation. Take the quads. If you feel like you got monkeys on your back, you need to trade. Make sure you're trading with everything's in your favor. Especially that 60-10. If it's moving up, it's so much easier to be long and just saying, all right, I'll deal with all this crap. I'll go take a walk and stuff, come back. It might be up 20 points. Better than trying to I don't believe this market's heading down. I'm a perma bull, and I think we're just going to go higher. But this is what I'm looking for. I don't care about the candle wicks. Give me a closing price divergence like this, a much higher rotation every single time. If I see that, you got to get in it. You got to put your stop right there. It's not going to be that hard. It's not going to be that hard if you eventually get to that point. Some days you're going to be frustrated. Some days you're gonna overtrade so much that you're going to get frustrated, and you're going to revenge trade, and then you're going to get reckless, and you're just going to trade because you're like, oh, I'm down $400. Now I'm just going to get reckless, and that's going to happen, and that's something you just gotta, eventually kind of fix yourself. All right. Divergences. If you have a good divergence and you get a pullback and it stays strong like here, you get out until there's a wedge pattern, and the wedge pattern broke down perfectly. It's very easy to get a sell divergence turn into a nice bull flag. Sell divergence turns into a bull flag by a fast rotation, and this holds at 80. All the situation is just kind of keeping you out of trouble. You don't have to worry about anything here. You don't have to worry about this going against you because you're taking it off. You're not saying, I'm trying to time my exit. I'm like, all right, fingers on the button. If I hear pop up, and I see a spike down, I sell right into it. I know I'm not going to get the best I'm not going to get the best price unless I catch the bottom, or sell the fear. I'm never going to get the best price unless I buy the fear. I'm never going to get the best selling price unless I sell the greed and sell on the way up. And why would I sell now? It's going up. Well, because everything, that's exactly why you want to sell now. Because it's going up. And you're not guaranteed what the next minute's going to bring. When it starts going down, then you're going to second guess and it's down further. Then you're going to get chopped up. But if the chances are, if you take your trade, you get your setup, you get the pop, take it off. Another trade is coming down the pipe, down the road. Overnight, you're seeing a lot of good trades. Overnight, let's go right now to the end of the day, and I'm going to send this video out and get done here tonight. Not much. You can see we're starting to see a little pullback here. So if I was sitting in front of my computer all night and stuff, and I'd have the bots running. The bots are running right now, but there's not much going on. We do have I think there was a 5-minute here. It's up a little, $150, the 5-minute quad. Where did that triggered? Oh, that was from yesterday. Why isn't this one triggering here? I missed something. 5-minute. Let me see if that's on. Yeah, that's on. Why does it say it's up 150? I don't see the trade. 12:30. It's not. That was this afternoon. This should have been flattened out. Anyway, I just saw that. That's not big. You have all those. You have all the bots here running. Each one of the bots is actually running on a different time frame. If you go to the bot channel, if you go to the bot channel at Day Trading Radio, I got all the bots here running. We're testing the Momo on the 1000 volume chart. On the bottom here, some short divergence. Over here on the left, the original gangster, which is called the 5-minute Thunderbird, but we put it on the 1-minute time frame. Works great. I'm working on the new script, the Momo down short script. But look at me, it's 12 o'clock here, and I wanted to get more of that done, but I have to go. I got to leave now. Tomorrow I have great day of trading ahead of us. We're going to do we have the jobs report tomorrow, but this is more of a roadmap, and I think it's a very important video for everyone to watch at any point. This is not a video that's focused on tomorrow, but it's focused on every day of your trading life. This is the key to success. It's discipline, patience, and only taking these trades and just waiting for those trades to come around. Look at the divergences today. When you see, and if you're going to take a gamble and you want to take these, that's great. All right, I'll leave off with this big first announcement. I'm starting back up the copy trading. If you made it to this part far in the thing, if you're, in the next 2 weeks, I'm going to try to get that up and running again, and we're going to start off the copy trading, and we're going to just be taking these setups. I got to just organize a little bit more so I could get these. I have the different accounts and stuff. It's not the easiest thing to do, so that's why I'm trying to work on some better ways of running it. But I'm very excited to get it going again, and I promised everyone I would. So that's the last announcement on that. And if you need anything, you can head over to daytradingradio.com and become a member. If you want the future trade alerts, and these are worth the weight in gold. They don't, really, really great alerts. I put out a lot today. Let me see. I showed you. So here, let me just go over this and let me show you this one. So today, I think we sent down an alert right here. What time was this? This was at 11 o'clock. Let's see. Yeah. Let's take a look.
All right, it's 11:04. We have a quad rotation here. 11:04.
See the quad here?
55.19.
Right.
Quad rotation. All four stochastics oversold at the same time. We tend to get these nice bounces off of that, and we're right on the lows of the day. So the bounce is not expected to be the big reversal, but we are always looking at the quad rotation to let you know there is opportunities here. Also, with the market underneath the 20, 50, 200 VWAP, and underneath most of the major areas, we're going to be looking for the rotations to be sold into. So watch that 9-3 rotation. As we at 10 o'clock, it sold off. At 10:30, it sold off. At 9:45, 9:40, kind of sold off. So all these rotations should be looked to as a possible short opportunity or take your profits from your longs. All right, the image I just sent out is an example of that quad rotation that moved up and we got overbought. And when you get overbought on the 9-3 and you push up against the 20-period moving average and your 60-10 stays under 20, that is what we call a textbook bear flag. And you're looking for a continuation breakdown there.
See that?
And that's exactly what happened.
So I send that out there. Because I want to announce it. So if you want those alerts here, you can get over to daytradingradio.com, daytradingradio.com, or you can get them on Patreon at patreon.com/daytradingradio. Put the links in the thing. Pay attention, make your set of rules, abide the rules, and that's it. It's going to be, you'll do this. You're going to get this. You're going to get through this. All right? Everyone have a good evening. I'm sending this out into the internet. Actually, I'm looking for a bounce here soon, too, because we just got a quad rotation coil here. So we'll see what happens tomorrow as we just enter that.